Good evening, everyone, and welcome to Admiral Markets webinar Price Action Trading School. So we are continuing with our third session and third class of Price Action Trading School, and today we will cover support and resistance and all aspects of support and resistance. Price Action Trading School is meant to last for a full year, and by visiting these webinars you will learn how to read, analyze and trade price action properly. Okay, as you could see, we had a great trade yesterday, euro yen, which I posted on Forex Street, and that was good for more than 150 pips. You can check it on Forex Street, euro yen, check the analysis, and that is a scholastic example of price action trading and analysis. Before we begin, as always, our standard is disclaimer. Okay, online education materials are developed by Admiral Markets as Estonia, and they are meant to be for global audience. If you want to get a corresponding information on charting conditions and any other detail, you should visit www.admiralmarketsglobal.com, then select your country and contact appropriate entity. There is disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And final part of risk disclaimer explaining that Admiral Markets UK Ltd takes no responsibility for information accuracy. This is solely my opinion. It's not MUK opinion, and Forex is risky business, and this webinar is for informational and educational purposes only. Of course, I want to state that it's really important to use up to 50% bonus on deposit if you want to invest in the account. It's the right time. It's good because doing so you will be expanding your margin. You can also, and you should also, download Admiral Market Supreme Edition because it covers really a lot of handful tools which can help you in your trading. And of course, you can do that by logging into Trader's Room. And today's agenda: defining support and resistance, manual support resistance levels, pivot points and ATR stops, X cross, live chart. Okay, so we are going step by step. Okay, we are proceeding with our PETS webinars, and we will be covering step by step price action trading school. We will cover most important aspects for proper reading and proper trading of price action. So you need to be very consistent, focused and careful, because this is not a fast course. That is why this is a school, and after a year you will see how it perfectly lays down. It will form a great basis for price action. Okay, meanwhile we will be, as I prepare the program very carefully, step by step, applying previous knowledge to our today's knowledge and future knowledge. It's always the same. Past plus present equals the future, right? So all previous knowledge is applied to today's knowledge, and that will be helpful in your future knowledge. And you will see how it will be great, because after that you should be really competent to read the price, trade the price properly. Okay, and of course, after we go through all of this analysis, after we go all through this price action trading school, we will of course be having webinars about how to actually trade with the price, and so we need to go step by step. So defining support and resistance is our primary goal when we start reading the charts. Okay, support and resistance is not the specific level. Okay, those are price zones. Now pay attention. Those are price zones where price is expected to react. Okay, trends do not move straight. They zigzag, forming progressively higher or lower peaks and lows. Okay, So trends do not move straight. Okay, these are the example of some trends: uptrend, sideways trend, downtrend. Now, support and resistance are not exact numbers. We treat it as zones. Remember our candlestick wicks? Remember, that is your first class, candlesticks and wicks. We use wicks to measure the zone. Okay? So we use the wicks to measure the zone. This is very important because a lot of traders think that support and resistance is a specific level. For example, 1250 on euro dollar. It's specific level, but it's not resistance. Resistance is the zone. Okay, that is why you can see it every time on my charts. POC, point of confluence. That is one of the aspects of point of confluence, is support and resistance zone. Okay, and the thing is, the zone is where you want to trade, not just specific level. It's okay if you wait for specific level to be hit, but you should treat the zone as is, because the zone will provide you with entries, with bouncing, with rejection spots. So GBPN 1 hour chart. So look at this. These are your wicks. Remember our first webinar about wicks. Remember quadrants, price quadrants. Now look at those wicks. Now, how do we define support and resistance? By placing horizontal lines at the bottom of the wicks here, because this is support, and at the bottom of the bodies. So most obvious bottom of the body is here, because we have 1, 2 connections. We also have price very, very close, sitting at this trend line. So this is our zone. This is from the body to the wick. Now you should always pay attention to that. This is your support zone in yellow, and this is your support level. Treat that respectfully. It's not the same. Support level is not the same as support zone. Now, this is the past, right? Now look what happened in the present. Okay, price tend to react always. That is why forex trading, at least in my opinion, is easier than stock trading, stock market trading, and indices. Stocks are basically moved very heavily by news. They are very heavily moved by some rumors, and indices are a group of stocks, and because of that we cannot identify so precise as we do in forex market those support and resistance levels. That is why I really love it. This is not just because, you know, I'm a trader and it's okay, I want to make money and whatever. I really love to trade. You know what I usually do? It's how I advise you. If you want to test the system, you want to test the strategy, open a small live account and do that. It's always like that. It's good, right? And really, those support and resistance zones, I enjoy in charting these zones. So this is basically how we should treat it. Okay, we should treat it. And support level, remember now, support level is not the same as support zone, or resistance level and resistance zone. So it's not the same. Do not be swayed. Okay, level is a level, zone is a zone. When you trade, when you chart, you need to pay attention to zone, because not always price will touch specific level and bounce. So you should always pay attention to zone. Okay, so wicks, you should pay attention to wicks. So these are wicks. It's most obvious. It's double bottom, right? And look at bodies. Look where bodies are located. So just draw 2 lines and you will see great support and great support zone. Same as for resistance. Same. For example, here at this, I would place it like this. So this, I would place a line here. Okay, this is, I cannot make it very precise, but for example, here, here, and here. Okay, so this is your primary zone and this is your secondary zone. Better chance is that the price will react from primary zone and you place your stop loss here. So that is how you define zones, always by connecting those bottoms or tops of the bodies and wicks. So this is your zone. Okay, so let's use a live chart example now. Okay, we always will follow through those live charts. Okay, here I will place it like this. Okay, so you can see euro dollar. What did I tell you guys? To sell euro dollar and to sell euro yen, and basically we got great trades. And now this is what important thing is. For example, you want to take a look at this pattern. So this is M pattern. We will talk about it on some of our next webinars. But at this point, it's important. For example, you don't see, you sit like here. You don't know what will happen. So you want to define a support zone because you don't know where the price will go. Place your line here. Okay. Here you can see it like this, and here. It's very obvious, right? Look at. I didn't take a look before I did this, okay? Before I placed those lines, and now I'm seeing the same thing as you. Look how the price reacted at the zone, and I only watch this double bottom and this bottom of the body. Okay, so we have basically identical bodies and identical wicks. This is a great support zone. Really, this is a great support zone. And now let's take a look how rejection was in the zone. Now, obviously, I will teach you about M. This is M bearish pattern. But look before M, what happened? Before M, it actually entered in the zone. Okay, it entered within the zone and then rejected for some 23, 24 pips. And that is how we place our support resistance zones. This is the easiest way to do it. Look at the price history. Sellers, buyers, sellers, buyers. So we expect at least that first touch in the zone will be some sort of rejection. And it happened. Right? It happened. Let's find another example. Same pair, it doesn't matter. For example, I don't know, let's pay attention to, okay, let's use this example. So obviously this is resistance. Okay? As you know, resistance can turn into support. But let's see. It's basically a triple top here. And look at the reaction here. We have almost identical tops of all these bodies. Look, body top and wick top. Okay, look at the reaction in the past. Look how it reacted in the past. Strong buying from this support. And in the Forex, what we said in Forex, price repeats itself. How can you not love trading Forex, really? Look at this. It's even if you lose a trade from time to time, it still doesn't matter because you know that you can learn this. This is not inachievable. You can learn this. Okay? Carolyn is saying Navin Pritiani from urbanforex.com is involved with this method. Well, maybe, I don't know. This is how I do it. Maybe he does it same way as I do. This is basically how I do it and how I always did it. And well, that is the way how I teach. Maybe someone does similar, but I really don't mind. So because I know that this is the right way to do. So probably there are some other people who do it same way. So look at this. Now look at this rejection. This was the part of my practical naked trading method which I made available some 5 years ago. So these were baby steps in price action trading. So 5-6 years ago, it's still the same. It will always be the same. It will always be the same. So look at this. So we made it here, right, connecting top of these 2 weeks and these most obvious bodies. So you need a discretion, right? You need to spot it by your own eyes. I don't know if there is an indicator which can do that, but you don't need indicator. Why would you need any indicator when trading price action? For these simple things. That is why I'm teaching you now how to use simple things in Forex. Keep it simple. Okay, so rejections, and look at this now. And in the future, what happened? Guys, look. Eventually, yes, this was rejection. But of course, by using previous concept of drawing trend lines, you can say that, well, this zone was indeed resistance. But I have ascending trend line. I was talking about trend lines. Do you remember it was our first or second webinar when I talked about trend lines? So now is the time to apply the principle. Okay, this is ascending trend line. This was resistance. Price broke through resistance. Well, we have X cross here. I will teach you what X cross is. Look at this. And obviously this starts to be uptrend. Okay, uptrend. And next rejections here. This was a fake breakout. And look at next rejection here. Straight from the zone. And look, everything which price did all this time happened within the zone. That is why I'm always saying trade in the zone, okay? Trade in the zone, not outside of it. And look, the rejection. So now you're familiar how to draw. If anything is not clear, guys, just ask me. Don't be afraid. Don't hesitate to ask me. I'm here to teach you. I'm here to explain. So I'm really trying to explain as simple as possible. Okay, so it's very, very obvious. Very obvious. Use this example. This is obviously resistance at this point. Okay, obviously a resistance here, here. Okay, so we have bodies, we have wicks. Let's see. Yes. Oh, look at this in the past, how it reacted here. Look. Incredible how this is so good, really. And look at this now. I'm always excited when I talk about this because this is the truth of Forex. This is the truth of the price. You don't have another truth. This is the core. Look, same thing. Breakout, retest, continuation here. Simple, very simple. Breakout, retest, continuation. You call it BPC. That is my term, I use it also. Breakout, pullback, continuation. Breakout, pullback, continuation. Some call it breakout, retest, continuation. It's the same. Breakout, retest, continuation. Okay, so this is how you do it and how you basically define support and resistance levels. Now let's get into a micro bits of price. Manually support and resistance levels. Those are defined where price has historically reacted. It's usually done on 4-hour chart and higher time frames. I usually do it on daily and monthly. Okay, You can also do it, of course, on 4-hour. But if you trade, let's say, if you trade intraday, then you do it on daily. If you trade 4 hours, then you do it on monthly, because it's easier to see monthly zones. Okay. So usually daily and monthly levels for swing traders. So find when price has rejected in the past. Draw a horizontal line. Okay. So this is how it looks like. Okay, we can easily see how the price reacted on daily. And when we spot that, we just need to put a line. Okay, it doesn't have to be very, very precise, but try to spot where reaction was. So this concept is similar to our quadrants of price. Look, okay, just observe it historically. Observe historically. Okay, let's use a live chart example. Okay, for example, New Zealand yen. You need to zoom out, guys. You need to zoom out. And when you zoom out, it's easily seen. Okay, you just need to place lines. Okay, you can also do it like this. Place the lines. It doesn't have to be very, very precise. Then when you place the line, zoom in and check. Just do a little bit of adjustment. Okay, and you see how price reacts to those levels. By flipping the chart to your left, you can see historical rejection. Yes, it can be done also with line chart. Okay, but I will need to align graph, place black. Okay, like this. You can also do it with line, but I don't do line charts. BT is asking, do you advise to place lines around numbers? Yes, I do. BT, yes, I do. But the thing is, sometimes if I do it, chart can be a little bit cluttered. So in my mind, I always know that round numbers and rounded, I call rounded numbers also round number, 0, 0, 50, right? So you can place lines on those numbers, indeed. But because of that, sometimes, especially if you use pivot points, the chart can be cluttered, really. Okay. So yeah, I usually do it like this. So I place, how I do it, I open a chart, I zoom out here and place the lines just by looking at tops and bottoms. Then I zoom in and I just see if it needs some adjustment. So observe the wicks and observe end of bodies, tops and bottom of bodies, and those wicks like this here. Okay. Yes, so many lines, but sometimes this is time consuming, but that is how you define manual support and resistance lines. Okay. Okay, so this is easy. You use the same method as you basically use for quadrants and for how I explained previously how to define support and resistance zone. Now you just need to place a lot more lines, but that is the way to go. You don't necessarily have to have all of this on your charts, all these lines. Sometimes it's even enough when you do quadrant, when you place a quadrant line, how I teach you on previous class. It was the first class, Candlesticks, and I explained how you place lines in quadrants. And basically, this is the same, but you don't use quadrants, you use price history. That is why you need to zoom out, and you have more clarity. Okay, but it's basically the same concept. Okay, and this is most important thing, how to properly define it. Okay, now those are manually support resistance levels. So similar to quadrants, okay? Price Action Trading School Candlesticks, a trend webinar. Refer to it if you don't know what a quadrant is. And the concept is applied to higher time frame. Okay, don't forget it. It's applied to higher time frame. You don't do it on 1 hour. You can do it on 4 hour and higher, as I explained. Okay. Now, pivot points and ATR stops. Okay, now we are talking about, again, support resistance, but we will use price calculations. Okay, so technical indicator, pivot point, simply put, is a technical indicator used to determine important support and resistance levels. It's usually the average of high, low, and closing price from the previous day. It is used to determine market sentiment. It was originally used by floor traders, and those are last session's high, low, and close price. So it has, all pivot point share some sort of calculation. Okay. Carolyn is asking, what is the difference between the ATR and ADR? Many on Forex Factor use ADR because they don't know what ADR and ATR is. I will tell you during this webinar what the main difference is. Actually, I have it here on slide. I will answer you right away. ADR is equal to ATR, but the main difference between ATR is ADR. ATR includes the gaps. ADR does not include the gaps. And we always include the gaps. That is why we trade with ATR, not with ADR. Good question and straight answer, because I knew that you probably someone of you would ask me those questions. So on Forex Factory, there are a lot of traders really who just jump from a system to a system, and they try to find something, and look, they don't even know what the difference between those two indicators are. So really, that is what I always warn you about. When you decide to trade Forex market, you always need to define what your goal is. If your goal is just to buy a system and trade the system, then you will never be happy, right? You will never be happy with trading, with profits, with you will all try to jump from one system to another, but you don't know what indicators are. If trading was so easily done by those indicators and crosses, everyone would be millionaires, but that is just not possible, right? So that is why we need to understand every single price structure, every single bit of the price. Okay. And Carol is saying he wishes to have a system that makes him only 20 pips a day. Well, the thing is, it's not about the system, it's about your psychology. It's about your money management. I always repeat it. Believe me, it's like that. So pivot points and ATR stops are something which I really advise you to use. I already sent you ATR indicator. If you don't know what ATR indicator is, you just need to email me. I will send it again, or I will send it if you don't have it. Okay. So ATR stop is used. I will talk about it. I just need to repeat that hourly, daily, and weekly pivot points are very, very important one. Hourly pivot points are used only for scalping purposes. So we are not using hourly pivot points on intraday trading and in, let's say, swing trading. We don't use it. So hourly pivot points are solely used for scalping, scalp swings, and daily and weekly points are used for intraday or swing trading. What Harbent is asking for email is different than on MT4. It's basically, I will show you how it looks like. So if you don't have that indicator, just send me an email and I will send you. So Mare, Mat, Camarilla, Booty, classic pivot points. So those are pivot points. The purpose of pivot points is the same. Okay, it's defining the zone. It's defining the zone. Arne is saying, what is the difference between ADR and Camarilla? ADR, this is ADR, and this slide answers to your question. ADR is basically telling you the range which the pair had moved previous day. It also tells you volatility of the pair. It's important for intraday traders. If the pair reach its ATR value, the movement is likely exhausted. So if you see that today's ATR exceeds last, let's say, 7 days ATR, for example, at the top side, would you really love or like to buy a currency pair? Okay. Goran is saying he needs to go. And yes, webinar will be uploaded. Okay, Goran, don't worry, it will be uploaded. So this is how it looks like. This is ATR indicator here. And basically, this is how it looks like on real chart. I will use now, okay. This is blank chart, and when I put this chart here, I will immediately put it. Okay. This is how it looks like. Okay, this is how it looks like. So look at this. GBPN made 220 pips today. Yesterday, last 7 days ATR was 197 because GBPN really moved a lot to the downside. And I told you guys, if you remember my analysis a couple of days ago, I hope that you remember GBPN. I told you that it's bearish and that it should reject and it should really go down. Now just take a look. It rejected from the top of ATR level and basically to the bottom. Now this is indicator of volatility. 220 pips, it's volatile. And last 7 days ATR is 197. We are not shorting it now. We are waiting for retracement. And this is also part of confluence. Now we will not be talking about Fibonacci because Fibonacci retracement is our next class. Now we are talking about ATR. So these are ATR levels which are printed by the indicator. Last 7 days of those levels in calculation are this. Okay. So anything which has in between 30 and 70 pips is not very volatile. Above 100%, 100 pips, it's normal volatility, and above 200 pips, it's high volatility. You can also have extreme volatility, 300, 400 pips. Okay, but at this point, it's enough for you to spot the levels and know that ATR will print out. I use usually last 7 days of price. You can use 14 days. And the thing is that when you see that ATR has reached to its extremes, you won't be trading it to that side. So if we are here now, even though if I'm right, I would never short it at this point. Never. Because look at ATR. 220 versus 197. Okay, so that is what we should pay attention to. X cross. What is an X cross? It's a trend line intersecting a pivot point or ATR stop. It usually forms X cross. Okay, X cross is strong support and resistance zone. We usually apply inner trend lines when we want to define an X cross. Okay, so the thing is, X crosses are often used in my analysis. Okay, live chart. Here, I think I have defined it already. Let me check. Okay, I will do it again, it doesn't matter. So usually, as I say, we apply an inner trend line. What is an inner trend line? Remember our first webinar, or it was the second one when we talked about trend lines. Inner trend line is a trend line which has already been broken. Okay, so this is inner trend line here. Look at this, 1, 2, 3 touches. This is almost a touch. And here at this particular time, price has made an X cross. So X cross is simply the zone, okay, where the price crosses this pivot point. This is one of confluence points, because when price reaches an X cross, usually it will resist. Okay, let's see if I can quickly find an example where we have active X cross. So basically where the price, I will be trying to find it. Okay, let's try to find it here. Yeah, definitely. Okay, look at this, guys. Even if you do it like this, you can use this because you have 2, 3 touches. Okay. So this is an X cross. This is X cross here, and we expect this zone to reject the price. So actually this now is the zone where we can also look for short entries, and it proved in the past. Told you to watch for 12:30, and that is happening here. You see how the price has rejected from the zone. And now if the price, for example, if this candle jumps straight away to this region, we can expect that it will give another resistance, because this is also an X cross with Camarilla pivot point. So this is a confluence. Okay, so that is an X cross. Let's use another example. I will put let's say Camarilla, and let's use dollar CAD. Okay, so X cross, let's see if we have. Okay, we don't have it here. I'm quickly scanning through these pairs to show you a possible X cross. Okay, here, very obvious. This is your X cross. Okay, so this gives the price additional confirmation that the level is indeed strong. This is not a proper X cross here, because this, you see, you only have 2 touches of this. Okay, this is the beginning of trend line, but usually you need to see another touch. You need to see that it connects some points in the past and the present. And here, if you take a look, it connects only the past, not the present. This is the present at this point. At this point, this was the present. This was the past. At this point here, this was the present. So this signifies X cross. Connect the past to present to give you the future. So actually, this is level where it should react, where the price should react. Okay, it's not that hard. You just need to practice it a bit. But well, that is price action. You don't have indicators to tell you. You need to do it by yourself, and it's actually the charm of trading. Okay, let's use, I don't know, you can do it with every single pair. Price is price. You don't need to use majors. It will usually be respected to the pip. Okay, another X cross here, connecting past to the present. X cross here. Okay, so past here, present equals future. Okay, future. So if the price hits the zone again, another rejection. So that is how you define X crosses. Now, guys, you need to really understand the power of these concepts, because this is only one step towards proper trading. So defining support and resistance is a beginning, very beginning in price action trading. This is the core of your price action. Now, let's use the logic. Okay, so here you see price touching these two lines. Next candle is basically rejecting it. So at this time, guys, you had uptrend. Now define your zone. Your zone is here. Now we are talking as this was present. Your zone is here, right? Look at the reaction. Straight drop without a retest. So next touch of the zone, which is basically 20 pips, 60.05 to 60.25, should probably give you another sell opportunity. Let's put, for example, let's put an indicator there. Let's put ATR indicator there. Do you see the same what I see? Very good confluence here. Very good confluence here with ATR. Look this X cross line. So actually trading in the zone will probably give you a very good stop loss here, because that is a confluence. BT is asking, when price touch the zone, how do you determine whether it bounces off or it will go straight to the zone? I don't determine it, I trade it. BT, have you ever visited one of my session recap webinars? Have you ever been to my, yes, and then you know what I'm talking about. I trade first touch in the zone. For example, EURUSD, now it's end of day, but if it was a normal trading session, if I spot that the price was here and it enters the zone, it tries to go up, it stops short, it's in the zone, I will place my trade. I will place my trade because I trade in the zone. I don't wait for confirmations. What confirmations? I can only take a look at 1 minute chart and then see how 1 minute shows, what 1 minute shows, and does it really reject the price. But I trade in the zone. That is, if you followed my session recap webinars, they are based on Camarilla MACD. And that is why they are really successful, because I don't wait. I'm giving you a prediction before it actually happened, pre-fact. That is hardest way. That is really hard. Not many traders and analysts give you pre-fact analysis. So I'm giving you basically what should happen based on these teachings, based on these methods. And it's hard. I know it's hard, but I have studied this really for a long time. For a long time before I actually started really to interpret it on chart. It took me a whole, I just cannot imagine and don't remember, but it took me really a lot of screening time to see how price reacts, more than 8 hours per day. So it was really hard, but it pays off. Okay, and this is the proper way to do it. Trend line, look, this is the zone. You have triple confluence. We're not talking about confluence, but we will cover it also. So what are all those levels of ATR? Are they like pivot points? Carolyn, you can treat it as pivot points. They are not the exact pivot points, but those levels are based on average true range calculation. EURUSD, you see, it's a volatile pair. It has more than 200 pips. Last 7 days, 250 last, and today it was 237. That is why we don't take short trades here. We are looking for counter trend opportunities. Watch the zone, guys. Watch this zone here. Look. Where the price reacted. Where the price reacted. Look. So this is not hard. You just need to understand it, and you need to be prepared for really to invest time in it. And of course, thanks to Almer Markets, now you have a free lesson. When I started to trade, no one gave me free lessons. I really needed to do it by myself. And it was a lot harder than it is for you now at this point. So this is how you determine your support and resistance zones. Easily, guys, easily. It's not hard. This is the first step in price action trading. The first step in price action trading. Okay? So what did you learn today? What have you learned? You learned that what support and resistance is. You learned that there are different aspects of support and resistance. Yes, morning star, excellent. Carolyn is saying there is a morning star there, and there is another confirmation here, indeed. But yes, that is how you use your knowledge, Carolyn. That is how you use your knowledge. And this is pin bar rejection. Remember our first class, pin bar rejection. And now you have learned about the zones. So now you just connect what you have learned so far. You just connect what you have learned so far. Rejections in the zone, almost a spinning top, it's bullish candle, and look how the price reacts. And you can also place a trend line here. Okay, this is not X cross because this is not inner trend line. When this, if the price breaks it down and goes up to retest, then it will be X cross. Okay, this is good example. Okay, so this is ascending trend line. Once the price breaks down, this trend line will become inner trend line, and it would form an X cross here, and also very good confluence with the bottom part of ATR. Okay, so very important for you to understand this. So you learned about ATR stop and X crosses. Your homework is you need to practice drawing manual support resistance levels. You don't need to do it on daily, weekly. Try to do it on 1 hour chart. Try to do it as I showed you at the very beginning of the webinar. Try to do it like this, 1 hour chart, and place these lines. You can also place it on daily chart, as I did it here. Try to place it. It doesn't cost you anything. You just need to give it some time. So try to place it. Okay? So you need to practice drawing manual support resistance levels. Practice always, guys, till next class. Practice finding X crosses. So inner trend line cross with pivot point or important zone is an X cross. Usually inner trend line crossing a pivot point. Okay? So inner trend line, once more, inner trend line crossing an important pivot point, it's the X cross. Okay? trend line, and it's usually inner trend line. So this defines X cross. Okay, look at this example here. This is an X cross here. And if you traded this from this POC, you could have made 150 pips because the price came here and rejected. Just test it. You open Euro Yen and see what happened. This is the zone. This is not level. That is why I'm very clear, very strict. 135.10 to 30 is the zone. That is where you place your trade. What confirmation? This is your confirmation. That is price action. Okay. And Carolyn is saying, Nana, you're lucky I'm not your nephew or another kin, because I would be coming every day to visit you and I would drive you crazy with my questions about Forex. Well, Carolyn, not even nephews and my kins have the access to my office. I'm really totally outside of the world. Really, this is my universe. This is what I do, and I'm not paying attention to outside things. Really, when I trade, when I do my day job, this is my day job, this is my work. No one has the right to access my office until I approve it. So really, I'm not in the mood to talk with anyone and anything. This is very consuming and hard work. So it's indeed indeed. I know a lot of people would love to come, but unfortunately, this is the way. This is the best way how we do it. This is really the best way over these webinars. You're constantly in touch with me. You're trading with a good broker, so you're safe. You're safe. You just need to practice a bit. And here we are. We are doing these webinars. We will be talking about money management, risk management, and definitely you will develop a proper way to analyze, read, and trade the market. Not just by entering where you should enter, but also placing proper lot size, which is the most important thing in Forex. Money management, risk management. So homework, you need to practice drawing manual support resistance levels, practice finding X crosses. And our next webinar is Price Action Trading School Fibonacci Retracement. I will be teaching you how to draw Fibonacci properly and what is the real power behind 88.6 Fibonacci retracement. Those advices are worth millions. Thank you for listening. I don't see any questions. I see comments. You should really have longer webinars. I could listen to you and Chris all day long. Yeah, thank you. Thank you. Thanks a lot, really, for the comment. I'm very glad that you are enjoying our webinars, really. And definitely, we are here to help you. Carolyn is saying, Nana, do you know if minimum ECN account allows 0.01 lots? No, Carolyn. Minimum for ECN account is 0.10 lots. Okay, so that is why the minimum deposit is something like 1,000 euros or dollars, if I remember correctly. So 0.10 is minimum lot size. Okay, 0.10. So thank you guys. Thanks for listening. Of course, I'm here with you. We'll be providing new analysis. Okay, do not forget to sign for session recap on Monday. We had great recap, euro-dollar trade, a lot of pips on that single trade. So thank you. I will be here with you soon. As always, guys, cheers and trade safe.